All right, so today's CPI is up 0.9%, and 5.4% increase on the 12-month change. And this, of course, has fanned the flames of inflation hysteria. Now, folks know I'm really not yet convinced that the inflation is anything but temporary. And I just want to add this. I'm being a little cheeky, but actually these are facts. A third of this month's consumer price increase came from another big jump in used car prices. This is the third straight month. June up 10.5% annually, May up 7.3%, and April up 10%. Now, that's a third of the increase right there, a third. So you could have been up 0.3% instead of 0.9%. By the way, the auctioneer Manheim is showing a 1.3% drop in June used car prices. And by the way, an 11% drop in used car sales. Now, the used car stuff, these are traditionally leading automotive indicators and leading inflation indicators. So I'm just saying maybe things aren't quite as bad as some folks think, but let's talk. This is a serious issue. Joining us now to discuss the best of the best, David Bahnsen, Bahnsen Group Managing Partner and Forbes Media Chairman and Editor-in-Chief, my great pal, Steve Forbes. So, Steve Forbes, what do you think of my used car argument? I mean, I know it's a little cheeky and maybe too clever by one, but this is the third straight month that's been the backbone of the CPI. So having said that, I'll turn it over to you.
Well, a lot of other things are going up as well. But when you have this kind of inflation, Larry, part of it is from the pandemic and the disruptions that caused. Far worse, I think, than most experts realized. And also, the Fed was printing too much money last year and even the year before. What's amazing, though, Larry, looking to the future, is that this year the Fed has not been creating new money. All that bond buying they're doing each month, $120 billion, they're neutralizing by a thing called reverse repos, in effect, reborrowing the money. So they put it out there and then borrow it back with overnight borrowings. So it's like putting a bucket of water in one end of the pool, going to the other end, and taking it out. You know, so the net money increase is not there. Now, with the big spending bills coming up and with Treasury drawing down their cash balances at the Fed, you could get the Fed creating a lot of brand new money in the months ahead, and they're not going to have gimmicks to stop it. But right now, the Fed is trying to make sure that the money supply isn't growing, amazingly, and it doesn't get any coverage.
I know. You're right.
I hope that's what they're doing.
No,
I hope that's what they're doing.
Can I be honest with you? I heard you say this on another show. It might have been Stu Varney, or I don't know which show, but I heard you say that. And I went and I talked to two Fed experts. I mean, look, I was trained originally in open market operations, but this reverse repo, essentially it does. It takes cash out. That means they're giving the bonds to dealers. The dealers have to take the bonds whether they want to or not, and then the dealers pay for cash. So they're draining cash from the banks to the Fed. So they're buying assets and printing money, and at the same time, they're essentially selling assets to take the money out. It's very weird.
Yes.
Stephen, I thought this was a guilt trip. They know they're too loose on the asset bond buying stuff. There's no reason for them to buy mortgage bonds either. So they're now trying to take it out daily with overnight reverse RPs, which is a real head scratcher. I mean, I think it's kind of dumb.
It's backdoor tapering, hoping to keep interest rates low.
That's right.
That's what it is.
No, that's good. So David Bahnsen, net. Actually, we have to show the Bahnsen lumber chart. We have a lumber chart dedicated to you, which you sent to us. So lumber prices, so commodity prices in general have soared, but lumber soared, and now lumber's come crashing down by what, 59% or some such thing. So, David, how do you read this whole? And I want you to confront my used car price argument.
Larry, I think your used car argument is exactly the point. There's transitory things, there's idiosyncratic things from disruptions, from unique circumstances, and to try to paint it as the broad type of monetary inflation that we had in the 1970s, I think is misguided. I agree exactly with what one of my economic heroes, Steve Forbes, just said, that the Fed is a part of this, but they clearly can't be because they're neutralizing so much of it. The biggest concern I have are the things that are happening to hurt future growth. People keep saying we're running too hot. I want a hot economy, meaning a growing one. Inflation and growth are not the same thing. And I am afraid that people don't understand what they're doing is going to hurt economic growth, not create inflation.
Well, if you jack up the taxes, Steve, you'll get supply-side inflation. You'll have too much money chasing too few goods. And I do think that's a gigantic threat, in which case I would be much more pessimistic on inflation. But, Steve, just to wind this up, I'm interested in market price indicators really haven't tracked the publicity of inflation. The tips break-evens, I know they're up a wee bit, but not a lot. The 10-year bond price, so it's $1.40, 1.4%. You know, on balance, it's actually come on down. And the dollar's been, King Dollar's been very steady, and even gold has been steady, Steve. So markets seem to be seeing through this, and I wanted to get your take on it.
Yeah, I think what the Fed is doing by, in effect, sucking out $800 billion in recent months from the banking system is why gold has been steady, why the 10-year has been down 25, 30 basis points. And but the key thing is really a threat in the future is if they go on these spending binges through reconciliation later this year, combined with tax increases, you're going to have what you had in the late 1970s. And so that's what I worry about is the future. And I'm not sure if the Fed understands inflation. They still believe that prosperity causes inflation. So I'm not sure they're going to understand how to deal with the pressures that are going to come when the government's going to say, buy these bonds. Jerome Powell wants to be reappointed chairman. Buy these enormous bonds. We need to finance this binge spending. That's when we're going to get in real trouble.
Well, those are important threats. I agree. Totally important threats. Gentlemen, thank you very much. Dave